Good afternoon, Dilip sir, and good afternoon, Team Rurash.
Good
Uh,
afternoon.
Good
Good
afternoon.
it's my privilege to
Good
introduce
afternoon.
to you today Dilip Davda ji, who needs no introduction. He's a veteran in equity markets with an experience of over 4 decades. With his plethora of knowledge and expertise in the stock market arena, we are privileged to have him at Rurash Think Tank. Sir, we are grateful to you that you have removed this time for Team Rurash and the entire team at Mumbai Rurash office and Bangalore Rurash office is here with us today to get some insights from you, which will help us manage our customers better. So over to you, Dilip sir. With a small note, we can start with the question session.
Thank you, Pawanji. I am Dilip Davda. Actually, I would like to give very little background of mine. I started investing in the stock market from 1976, and then I joined the market in 1979 on a part-time basis. And from 85, I started contributing on the stock markets in print media. And at that time, if you all remember, might have come across the Financial Weekly known as Money Opportunity, which was started by Rose Muraka Group. And thereafter, we have seen the plethora of so many financial weeklies coming in so many languages also. But that was the ice-breaking thing. And till then, if you can recall, stock market was not reported at all in any pink media or dailies. And after Money Opportunity success, Economic Times, Financial Express, Times of India, they all started covering stock market news. And today again we are seeing this kind of papers, continuing that trend. But Money Opportunity is closed by default because Rose Burarka could not sustain. But after that, I contributed to many papers like Times of India, Mumbai Samachar, Gujarat Samachar, Bhumi, Free Press, Financial Weeklies. There were plethora of magazines or publications where I was contributing. And currently, I am confined to only chittorgarh.com, and that too with the main uh, aspect of IPOs. And I am proud to inform you that I have covered more than 2,000 IPOs in last 2.5 decades, and perhaps I am the only person who has done this kind of things because I am covering all IPOs, whether it is main board, right issue, SME IPOs, NCDs, etc., etc. So with that background, I have just I will start this today's meeting with you. First of all, good afternoon from my side to everybody, and wish you all the best for 2022, which has just you know started actually, but we are meeting for the first time in 2022. Yes, I have gone through the questionnaire sent by you, and where I found the main thing is about for moving around LIC IPO, which was actually the talk of the world primarily and talk of the Indian investors in general, and all are very eager to know about what is happening for the LIC IPO because as per the very primary hint, the IPO was supposed to be somewhere around 65,000 to 70,000 crore, but with the onset of Russia-Ukraine tussle and the things as we have seen for last 3 weeks, right from 24th February, market started declining and that kept everybody on the hold. And even LIC IPO, which was expected to get SEBI node yesterday, could not get. So I think the market has the feeler that this IPO will be deferred to next fiscal. But according to the news which I have, this IPO is likely to be completed in this fiscal itself because of sovereign reasons, and at the same time, it is also having credit of Indian markets at stake. So I'm expecting that if this IPO gets approval in this week, they might try to bring this IPO with lower valuations and lower size. and that is how they will complain, and they will try to finish whatever they can as far as fiscal deficit is concerned. So if I can start with the first question of Mr. Bhumit, what is your view on LIC IPO? So that I have covered to some extent, but still I am keeping my fingers crossed because if we again talk about Russia-Ukraine war, which is said to be a little bigger size of what we have seen in the case of Afghanistan Taliban. Because here I don't think the world will jump in and we will have the third world war, but it's a localized issue because as we know, Ukraine is nothing else but the ex part of USSR, that is United Soviet States of Russia. And because this Russian President Putin has started moving this Ukraine's thing, it is considered to be rather localized event. But currently, it is attracting entire world's attention. And here again, because at the time of Afghanistan, Taliban, there was no such issue. But here, because NATO's are involved, and sanctions are being levied against Russia and Ukraine. And as we know, both these countries have lot of export-import obligations and treaty and economical play with the global economy. So that is where I think we are seeing some kind of negative trends, and that is where I think we will have to wait and watch for this. So here we say that 20% correction, but I think if we see the high of 63,000 and today is 53,000 somewhere around in Sensex, so it's a fall of about 10,000 points roughly, which amounts to about same about 15%, not 20%. So here I would like to keep for tab that we have to watch the situation, and if we have to again see when everybody is jumping in this issue of USSR, that is Russia and Ukraine, it's very premature to say anything, but as I have said little while ago, that it's considered to be a localized issue rather than the world issue, global issue. And here again, if we have to take into consideration some of the astrologers' forecast, maybe after next week, this issue will be subsided and market will start recovery. But before that, whatever damage has happened will take some time to get back on count, and we might have to wait for the second or third week of March rather to get the real impact of global economy and how we are trying. Here again, one more interesting thing I would like to inform you that according to the market sources, if LIC IPO differs to next fiscal, then there are about half a dozen main board IPOs and maybe around 8, 9 SME IPOs who are sitting on fence will drop their head in the fray to raise the money because nobody wanted to clash with mega IPO of LIC, and even merchant banking lobby also don't want to take any kind of risk with any IPO, either clashing with LIC IPO or soon thereafter, because if we consider the size of about 60,000 crore for the IPO, it will definitely have the liquidity crunch in the market. And as we know, this is being the final month of the financial year 21-22. Everybody will be busy behind their tax calculations and all these things. So all these things are combined, and that is how I think LIC IPO is still at the center set of the markets, whether it is primary market or secondary market. You can definitely interact me if you want, because I want to make this interactive rather than I am only speaking and you are listening.
Sure, sir. So we would want the team to ask questions as they wish to Dilip, sir.
Yeah, that would be better, I think.
Yes, sure, sir. So, Tejas, Bhumit.
Yes, sir. Yeah, hi, good afternoon, Dilip sir. Tejas this side.
Yeah, Tejas.
So, sir, as discussed about LIC IPO, apart from LIC IPO, what other IPOs investors should look out for in 22? And given that 20% correction across the listed market, in top companies, so is it viable to look for other IPOs in coming year?
when you are talking about talking about 20% correction, I would like to correct that we have seen 75% correction in the so-called mega IPO so far from Paytm, if you all recall. It was the biggest IPO so far with 18,300 crore funding raised by the company, and the 1 rupee share which was issued at 2150 has marked a low of 728 today. Means it is more than 76% fall. And thereafter, I have written in my review about the valuation and valuation that was given to the high-tech companies and unicorns, which was mind-boggling, and it was happening for the first time in Indian context. But that time I interacted with many people and said that, see, we have to keep in mind the Indian mentality, which is not mature enough like advanced countries. And secondly, when we see companies having losses and still not sure when they will turn the corner, this kind of valuation was reasonable. Now, anybody of you can also join me in saying, was that the valuation correct for Paytm IPO, which was loss making, and even promoters were not knowing when they will turning the corner. Secondly, when they were asked after the IPO, they said that this was the lowest price they brought to give benefits to the new investors, but we have seen the fate after listing what has happened. So how they could claim that the 2150 price fixed by them was the lowest according to them? I am still unable to understand that thing. Secondly, that time so many loss-making companies came in the market, and they also have faced the music, but it is not to the extent that Paytm has witnessed. And here again, one more item that is Zomato. 1 rupee share was issued at 76. There also I criticized 1 rupee share at 76 means 10 rupee share at 760 for a company which has no assets. It is just a service company, and though they were asset light and debt free, but their operation was not able to understand or not having that kind of valuation which was given. And today we are seeing that even that IPO is just around its issue price. So that is what is definitely having its weight on the primary market for a while, and that is why we are, I think, definitely going to see some kind of changes and some realistic valuations for the IPO. Here, one more point I would like to add that according to the information that I have, change of guard at SEBI has happened for good, and I am expecting so many measures and steps taken by the new chairman or chairperson of SEBI, and that will definitely have some weightage on the primary market in general, and it will also cascade its impact on the secondary market as well post listing, because there are so many new things are changing and which may take from 1st of April implementation and follow. Yes.
So next is my colleague from Bangalore who heads the South Zone for Rurash. His name is Dharmil Goda.
Hi, sir. Good afternoon.
Good afternoon.
Yeah. So I just have a question. Uh, what's your take on these new age investors which are looking to invest into these startups which are having absurd valuations? Should an investor just stick to a traditional or a fundamentally strong company, or also keep on investing into these startups?
See, as I just mentioned about two startups, that is Zomato and Paytm, and the threat we have seen so far, and the valuation part for this kind of startups in India, you rightly said that new age investors are just investing money and trying to make their fortune. But let me tell you, we have to keep in mind fundamentals of the company as well as the future likely trends for that kind of companies, because these all startups are again very new, and we don't have this kind of backgrounds for the companies in the recent past or even past. All these startups are happening for the first time, and there again we don't know what kind of future they will shape out and what kind of marketing and what kind of support they will get from the new age investors. Here I would like to inform you one very interesting story which has happened in the case of Zomato and Paytm. when we went through the data of the subscription, we found the 38% subscription coming from the new generation, which invested for the first time. And this generation was again somewhere in the range of 25 to 30 years of age. They were investing for the first time and without having any kind of knowledge. As you know, primary market or even secondary market, all this investment in the stock market are joined with the market risks, which are endless, because nobody can say what will happen to market after some time. So there, these people have invested. They made some fortune in Zomato, but in Paytm they witnessed very huge losses, and that has given them a good lesson also, according to me. So with this kind of things, I think now pricing of the IPO will be at the center stage, and I'm expecting some steps from the SEBI on this part. Though we have been listening about some sort of rule frames on the IPO pricing from SEBI for last more than a decade, but so far it has done everything else except pricing of the IPO. But now I think it's going to be at center stage, and they will be taking some action over there.
Right, sir. So next is my colleague Mitesh Shah, who heads the fixed income business for Rurash.
Yeah, Mitesh.
Hi, Dilip sir. So
Yeah.
there was some fascinating point that you mentioned saying that with respect to the Paytm scenario, but after Paytm scenario, in the unlisted space, there is a huge trend coming out from retail investors or the new investors to park their funds in the alternative investment or the different asset classes. So what's your take on it? Like, you think that this industry as a whole can create a new alternative space for the investment from the client side? Or how is your take on it?
See, when we are talking of unlisted shares, I think it's a good move, and it is going to have good markets going forward, because uh, that is where I think we have seen in the recent past so many companies traded in the unlisted segment made good money even before the company announces the IPO and announces the price band for the main offer. But here again, one has to keep in mind the case that has happened in the case of Paytm. If you recall, Paytm was quoting somewhere around 850, 900 before they announced their IPO. But once they announced, the same share went to about 2000, 2500 in unlisted market. And based on that movement, they fixed the price of 21508. That is what Vijay Sharma told at one of the meeting. But it was a sheer madness, nothing else, because there was nothing in the company. Company was loss making, and let me tell you that whosoever invests in the market should have the knowledge about the investment he is making, because one should not invest in a company which is loss making and where there is no surety when they are going to turn the corner. This is what has exactly happened in the case of KTM. So, of course, unlisted market is good, and it is much more better than the grey market, because grey market is totally unofficial and totally baseless, whereas in unlisted we have some base, and we are finding people in this market and trade taking place in this market via SEBI registered as well as non-registered entities, financial companies. So it's a good movement. And secondly, because whatever is happening in unlisted market is happening in official format, demat format, which is not happening in grey market. So I'm sure that this unlisted market or unlisted segment is catching attention of not only the investors but also from the regulatory body. And according to the information that I have, I think this market is now unlisted is about 5-6 years back we started. I think not before that. And during this period, voluntarily the operators in the unlisted market approached SEBI for registration part and their regulation and all these things. But that time SEBI said, okay, no, since you are doing officially everything, we have no objection. And as long as we don't find any kind of complaints or lacuna, we will not interfere. But after Paytm fiasco, they are having second thought, and they might start, regulation of this market as well. Though it is traded on OTC, no official exchange like BSE, NSE is involved in these trades so far. But Many brokers who are registered with SEBI are doing this business, and there are so many other people who are not registered. So they might try to register the unregistered people and promote this market. At the same time, they might open up the OTC, which is closed now, to promote this kind of market, and that is going to happen for a good of the investors. Here, actually, I am tempted to tell one point which was made by well-known dignitary Sri Deepak Parekh, HDFC Group's chairman. He said in one of the meetings where I was also a participant that when you are talking about primary market, whether it is unlisted, listed, this market is new, and there whatever investment is being made by us should be meant for long term, not for listing gains or short term. Because we don't know the company who is coming today with the IPO, we don't have their background, listed background or something like that. And we have to wait for their performance and their fulfilling of the investors' confidence going forward with their performance and investments in the new eras and all these things. So Mr. Deepak Parekh rightly said that if you want to make short-time money where listing it, instead of listing also you are here now in current scenario, one has to wait for at least 7 days minimum. So what he said, instead of coming to the primary market, why don't you invest in the stock market where you have at the same time about 3,500 odd companies available where you can make money at a fraction of time. Not even you have to wait for the end of the day. You can make money within 5 minutes, or half hour, 1 hour. So those who are investing in the primary market for listing gains, they should stay away. And this is the biggest crowd which is worrying everybody, whether it is promoter, whether it is merchant bankers, or whether it is other investors who are really wanting to invest for good long-term period with their information about the company and the sector which is there in the company. So one has to bear in this mind that any investment for the stock market, though it is related to market risk and all this thing, but primary market in particular, one should invest in this market with a long-term perspective. But before that, they should do their homework and study about the companies and take the known decision, informed decision.
Right, sir. Thank you.
Sir, the next question comes to you from Mr. Harshal Handa, who heads a business vertical for loans for Rurash.
Hello, sir. Good afternoon.
Good afternoon.
So my question to you is basically considering the current market situation, Ukraine-Russia war, expected hike in interest rates, over the top inflation, what would you suggest investors to hold on in a portfolio at the asset class level and within the asset class? Which sectors do you currently look are more attractive to invest as of now?
Harshal, you have raised a very good question. As we know, after boiling crude oil prices and inflation, rising day by day globally, is going to have impact on the interest rates, and that we have already started seeing. If you have gone through the media reports, that banks' FD rates have been hiked by at least 50 basis point by everywhere actually. So this trend is likely to continue for a while, and I'm expecting these rates to settle somewhere around 7.5% for short-term deposits. And when you say asset class, then of course one has to consider balanced asset class for investment, whether it is stock market, FDs, NCDs, or any other form of investment like gold and realty and all these things. So balanced investment would always mean and protect you from any kind of market risk, because all these segments will not have downfall at the same time, because they have cyclical things also many a times. And that is where I think one has to take care of investment rationals. And as you say, interest rates, so interest rates are going to be on the northward march, and I'm expecting in the next RBI monetary meeting hike in the interest rates also. and that is what is happening in global also. I think in US also, US Federal Bank is has hinted about two hikes in the interest rate in next 4 to 5 months. So they are trying to counter this inflation and all these things. So let us see how these things checked out, because we are seeing this kind of situations for the first time. This kind of war-like situation globally, and the market which is at its peak, as you know, because 2021 has emerged as the record year for the Indian markets, with almost 10,000 point rise in a year in Sensex. And that is how I think markets definitely gearing. And if you consider again the investors count for India, it is hardly about 5 to 6% of the overall population. So India has a great potential for development of this market, whether you say it unlisted, primary or secondary. Everywhere we will find some kind of investment coming in from the investors. And here one more story which I have come across is that during this pandemic, last 2 years lockdown period, many people's lavish expenses of going out, outing and fooding, tours and all these things has come to standstill, and that is how they had surplus money, and that they started parking in the market, and that is how market witnessed this kind of hike in 2021, a record year for the Indian market. And this trend will continue, but it will not have the similar kind of pace of rise. But if you again recall some of the foreign investors institutions that they are predicting Sensex of 1 lakh and Nifty of about 30,000 in next 3 years time. So that is where the things lies.
Right, sir. So the next question comes to you from a colleague of mine from Bombay team. His name is Dipesh Himani.
Hello, sir.
Hello.
Sir, do you think informative content about unlisted market on social media help in gathering momentum about the pre-IPO frenzy?
Yes, because we have one very good saying in the Gujarati, "Bole na bor vechai." So I think when we are in the stock market, one should know Gujarati, because even today, more than 65% investors are good Jews. So bole na bor veche, when we say, so that is of course, if you, unless you inform, unless you come to the social media and inform what is what, how people will know about you. So that social marketing trend has to continue, and it has to be flourish further, and that is where we all have to play a common role of educating the investors, keeping them informed about what is going on in the market and what should uh, happen going forward and how they should come. And as we know, we have gone to schools, but after even getting lessons from our teacher, unless we do homework, we are not getting what you can say, the expertise or the confidence of doing what we are doing. So here also we will keep doing our job of educating the investors, but ultimately investors also have to come forward with their own homework and take a calculative informed move.
Right, sir. So the next question comes to you from a veteran with Rurash and the unlisted space. Her name is Nisha Sharma. She manages a large team at Bombay office.
Yeah, Nisha, please.
Nisha, you're on mute.
Hi, sir. My question for you is like, why one should invest in unlisted equity when they are getting better opportunity in listed space?
First of all, happy Women's Day to you as well as all other women participating in today's meet. You have raised a very good question, but as unlisted market is purely meant for the informed investors, and we have seen so many things in the unlisted space also giving good rewards to the investors even before listing of those IPOs, or even any kind of other movements by the companies which are traded in the unlisted part. So listed market is just lacking on the part of regulations and the regular trades, because when we say unlisted, you will find the rates differing from house to house and from person to person, which is not happening in this official stock market. So that is where investors get confused to some extent about the pricing. What is the regional price? Because if I have to give example, this Farm Easy IPO is coming shortly, but that is also there in unlisted space. But you will find price variation ranging from say about 10 to 15 rupees per trade in bid and offer, and that is where people gets confused. What is the reasonable price and how they should get bargain. Here on the listed arena, you get so many people having bid and offer because you can track it on your screen. So many bids and offers are appearing, but in unlisted, it is not so, because you have to search for the bid and offer and ultimately match, and ultimately you have to decide what rate you will prefer to buy at or you sell it, something like that. So in this unlisted space, price variation is the main lacuna, I can say so.
Okay, thank you.
So the last question for today's session comes from Tejas Rathod again,
Yeah.
and then we'll throw the floor open, and we will then ask our CEO, Mr. Ranjit Jha, to voice out a thank you note. Yes,
Sure.
Tejas.
Yeah. So my last question is, how do you see the growth in investment into this alternative investment class by retail investors post the debacle of Paytm and PB FinTech IPO?
See, retail investors need some sort of education about their investment part, and that is where people like me have to always do something. And as we know, because see, financial institutions and the fund houses have their studies and researchers and team of experts, whereas retail investors are missing on that count. So that is why, if you have come across my disclaimer, though I am trying to give them the required info to the best of my knowledge and to the best of my perceptions, but still I mentioned that when you decide to invest in market, you should have second opinion, and that too with your financial advisor. You must consult before investing and get well informed about the company and your investment plans. So means how long you would like to continue with that company, and at what rate you would like to exit, and at what rate it should be a reasonable bet for you as far as secondary market is concerned. For listed, unlisted also, I think same thing will happen and same thing will take shape. So we have to play an important role for educating the retail masses in particular about company, and that is where I think a question from your team came to me about social media. So social, not only social media, even you as a marketeer of unlisted shares will have to come out on your website also some sort of information passing on to the investors, and information about some new companies where you find that this company is having bright prospects and investors should start looking at this kind of companies in unlisted space. And there again, one has to again get the follow. When we are talking about unlisted, the further lacuna, according to my view, is that limited availability of the information about the companies. For listed space, you get information whatever you need from stock exchange or even from the website of the companies. But for unlisted, because it is not mandatory for them, you are not getting the information required for the investors on their websites. So that is where we have to play some important role, and inform the investors and also attract them, and actually make them investing in the company where we see that this company is poised for a bright prospects.
Right, sir. So, sir, I move to the last part of the session, Rurash Think Tank. I would request Mr. Ranjit Jha, our CEO, to say the final words and take this forward.
Good afternoon, everyone. Thank you, team. Thank you, Pawan, for giving me this opportunity. Uh, Dilip ji, it has been really nice session, and you have given so many insights about how and what do you perceive, and coming with a body of 40 plus year experience into the stock market really opens up our eye. Looking at the audience that you were addressing, and by and large, we are in our mid 20s. Uh,
Okay.
so, I would also like to interact with the team, on this occasion, that I think by and large people are carried away by what happened with PB FinTech or policy PTM, but there are other things also to look at and to ponder upon. There are so many opportunities in an Indian startup that is eventually going to come to the pre-IPO market and then to the IPO market. Obviously, when the liquidity is high. So I mean, the same money is chasing lot of stocks. So I mean, the money is chasing stocks, and the business is chasing people. So it is the function of liquidity that that sometimes drives the valuation at a very higher level. Coming back to what the opportunities that people have missed and would be missing. There are stocks where people have made 10x returns, 20x returns. I mean, I have personally invested in a company called ICIC Lombard. At when we had started investing, it was 100 rupees, and that stock when listed at 580, from 580 it went up to 1600. So there are also opportunity like this. When this company called Studs Accessory, which is the global market in terms of two-wheeler manufacture helmets, uh, the price has moved up almost, I think, 160, times. I mean, 16,000%, 17,000% returns. So don't get carried away about what happened with Paytm or what happened with PB FinTech. Even the investment bankers, the so-called, the informed people, I mean, bringing out this IPO, could get this wrong. And people do get wrong in the market, whether it's listed, unlisted. But Dilip ji has rightly said, fundamentally you'll have to give chance to the company to perform. The business has to grow. The business has to make money. I mean, the recent companies that we are talking about, they're all loss-making companies. But the business outlook has changed. Earlier we used to see a lot of product model innovation. Now we are seeing business model innovation. Look at this company called Zero Da. When they had started, they were giving free brokerage. But look at the wealth that they have created. The Kamath family individually, both the brothers are worth at least 20,000 crore. So even they were loss-making company. Look at Zomato. What Zomato is saying, I'll just give you an example. What Zomato is saying. Zomato is saying, okay, we are not making money, but we'll have to make money somewhere. So how they're integrating and what they're looking at is a backward integration. They're not making money on charging 50 rupees to you on the delivery, but what they'll say, they'll look at the area called Kandivali. I mean, then they'll figure out where is the demand for breakfast coming from. They'll look at this pocket, this pocket, this pocket, the demand is coming. But what is the most common ordered item? They figure out it is idli. So then they'll go back to the restaurant and say, at what price are you procuring this idli batter? They'll say 20 rupees kg or 25 rupees kg. Zomato will go back and figure out how to make that idli batter available at 10 rupees or 12 rupees per kg. And that is where they'll try to make out the money. Suppose if the restaurant guy will not agree, that I'll not sell your idli, what they'll do is, they'll do reverse engineering. They'll make the same palette, same taste idli available in the entire area. I mean, the kind of data that they have, every minute what is ordered in India, at late night what is ordered in India. Biryani is the most ordered item across India. So this is where information. This is where they'll make money. So if you look at a company called Happiest Mind, it is traded at 50 time price to book. What does that mean? That only 2% of the company is on the balance sheet and 98% of the company is off balance sheet. Similarly, what is happening with Zomato or Farm Easy, they are running on a similar model, and eventually these companies will become giant. And Policy Bazaar or Paytm at this price, I mean, it becomes very attractive for any bank or a financial services organization to go and buy out this entire company, obviously with the CCI and regulators approval. but they are available at throwaway valuation. From the valuation, look at the policy whether price that it had touched, almost 2,000 rupees to 600 $700. It is available at one third of the valuation to the peak. I know it is loss making, but you understand from a company's perspective. Suppose if I run a Kotak Bank, for a platform leader which is fundamentally so strong into insurance domain, if I buy out that company, look at the difference that I can make. So suppose if Policy Bazaar get a get a price to earning ratio of 10 times, and Kotak Bank, where the price to earning ratio is about 15 times. If the Policy Bazaar is taken over by Kotak Bank, the price to earning ratio of the Policy Bazaar will also be rated at 15 times because it was acquired. So it makes a lot of sense for the business owners like banks or an NBFC like Bajaj Financials or maybe Max to go and look out this opportunity. It will be shocking to know to all of you that just go and look at the number of promoter holding increase from September quarter to December quarter and from December quarter to March quarter. There is a significantly increase in terms of the promoters buying that stock directly indirectly, because at this price it becomes very attractive for them to go out and increase their ownership in the company. So these are 2 cents from my side. Thank you, Dilip ji, and thank you team for being around.
Ranjit ji, can I have some 2 words to say again?
Certainly,
Sure.
sir. You're most welcome.
Sir, I would, since you mentioned about investment for the long term, so here I would like to have 2 quotes. One is in English, that is Rome was not built in a day, and
Correct.
one is in Gujarati, Amba utawale na pake.
Sir, I've also seen Rurash was not built in one day. When I started, I was started with a single bag. Today we have 50 plus people in the last 3 years.
So that is what I say. Okay, once you are seeding a seed, you have to wait for that to grow, start bearing fruits, and then you can have the fruit. But it takes time. And
Yeah,
here, I have come across so many people, this thing, who have invested for long term. Particularly, I have friends who have invested in Infosys at par, and they're still holding on. They have become crore-patis today.
similarly, sir, absolutely. Companies like we had invested in a company called Astral Poly. It was 100 crore market cap when we had invested. When we made an exit, it was 7,000 crore, and today it is 35,000 crore company.
Yeah. And when you say about market valuations, yeah, I would like to give my own example. Being a SEBI registered analyst, since last 5 7 years, I have stopped investing in the market. But what was my folio at that time? It has appreciated by almost 120% in last 5 years time. Of course, it has gone down by about 5 6% in last 2 3 weeks because of the happenings all over the world. But without doing anything from my side, I kept on getting dividend, and my valuation of that stocks have multiplied by almost 120 times.
Right, sir. Sir,
Yeah.
thank you so much from Team Rurash for your valuable time and insights. We look forward to have few more sessions in the near future with you. Thank you so much.
Sure.
Thank you, sir.
Yeah.
Thank you.
Thank you, sir. Thank you.
Take care, stay safe all. Thank you. Good day.
Thank you.
Thank you.